to get down to business? Join seasoned entrepreneur, community leader, and Army veteran Scott Shalom Klein, who will take you behind the scenes with those who work in America's small business scene and speak with leaders making an impact, creating jobs, and telling their story in entrepreneurship. So let's get down to business. On AM 560, The Answer, here's your host, Shalom Klein.
And indeed, we're all about business, small business. And we are going to kick off today with an incredible guest who's turned his own financial journey into a roadmap for others. Our guest, Kawaoka, is a former engineer who went from the corporate grind to building a massive $2.1 billion real estate portfolio. He's the author of the book, The Wealth Elevator, and host of the Simple Passive Cash Flow podcast. And he's dedicated to helping everyday professionals and business owners break free from the paycheck to paycheck cycle. Lane has a powerful story that I know he's going to share with us here today, as well as share some insights on building scalable investments, creating community impact, and the real truth about achieving financial freedom. Welcome to the show, Lane.
Hey, thanks for having me. Aloha, everybody.
Hello. Lane, you went from being a corporate engineer to a real estate mogul. What was the turning point for you? What made you decide to leave a stable W-2 income to pursue a different path?
Well, initially, it was started with one little rental property back in 2009. Started to realize, wow, this is my ticket out of an engineering job I did not like. So fast forward maybe about 5-6 years, had 11 rental properties by 2015, and then start to buy apartments. And there was a little bit of overlap buying apartments and still working the engineering grind. But right before the pandemic there, finally started to realize that I need to kind of focus my full-time energy on this, and kind of changed it into, swapped out the job for this I guess, new career or new business in commercial real estate.
Yeah, and your book is called The Wealth Elevator. Can you explain the core concept of that elevator and how it helps professionals and entrepreneurs build wealth differently from what they're taught by Wall Street?
Yeah, so I wrote this book, not for the average Joe out there, more for folks like myself, getting started as an engineer, right? Like, a lot of 6-figure corporate guys, or guys who have their own businesses where they may make multiple 6 figures and already accredited investors. So we start, the wealth elevators is this sort of an analogy where you have these different floors of a building. Most books out there written for guys in the basement, right? Guys who are maybe less than $100,000 net worth, make less than 50 grand a year, in debt, credit card debt. A lot of those techniques or tips out there is, don't do that $5 latte thing, and, keep a budget. I was lucky to kind of skip over that. So that's where the wealth elevator curriculum kind of starts, and, to me, when you're a non-accredited investor, but you got some money, you buy little rental properties. And that's exactly what I did from 2009 to 2015. But as you become more of an accredited investor, as I did certainly before 2020, I started to interact with other accredited investors and started to realize that a lot of them will leave their little rental properties behind, trade them in for syndications and private placements, and do a lot of other different tax strategies and legal strategies. And that's what we kind of open up in the Wealth Elevator book.
Amazing. It's a fantastic read, and I know we're going to share more information as we come along in the conversation. But Lane, you've built a massive real estate portfolio. For our audience of business owners and professionals, what's one piece of actionable advice that you have for turning a W-2 salary or business profit into truly passive, scalable wealth?
Well, whether it's 100 units, 500 units, or just one unit, right? I think you got to break it down to just profit and loss statements. And, when you're buying a little rental property, the first thing to look at is the rent to value ratio. When I first bought a rental property, it was out there in Seattle, Washington. Places like that is what we call primary markets. So California, New York, Boston, great places to live, but you're just not going to make the numbers work. A lot of times those rent to value ratios are going to be less than 1% or 0.5%. And, I guess maybe I should define what that rent to value ratio is. So you take the monthly rents divided by that purchase price, and that's a quick indicator if you're going to be cash flowing on a monthly basis. So when I first started, I would buy properties that were maybe about $80,000, $100,000 a piece out in the Midwest, Birmingham, Atlanta, Indianapolis, to be specific. And a lot of these properties would rent for about $1,000 or more a month. So you take the monthly rental price, $1,000 divided by $100,000, that's 1%. So that's really kind of that base level, like that threshold you want to be hitting, so at least you're cash flowing on a monthly basis. And a lot of people I talk to these days, they're just in places like California. You'd be lucky to find a place in the ghetto for $400,000 that will still rent for $2,500, $2,000 a month, which is about half of what you'll get elsewhere.
Yeah, absolutely. And Lane, I've heard you talk in the past on helping the shrinking middle class. What specific challenges do you see this group facing, and how does your approach to real estate investing provide them with opportunities that are often reserved for ultra wealthy?
Well, I'm not a certified financial planner. Let's get that straight. If not, I would have to charge you for advice and get a cut of all the commissions and all that stuff. These are the gatekeepers in the retail investment world. I think some people are very keen to just go through index funds and things like that. But in reality, you're still investing in what's called the retail investment market. I learned this very early on when I bought a little rental property just on my own. Nothing special, no renovations, no heavy lifting or anything like that on my part. Just buy and hold. I was making 15 to 30% on my money every single year. When you factor in all the tax benefits, the appreciation, the cash flow, and the fact that the tenant is paying down my mortgage for me. And that's a huge difference between, you owning rental property and you're the one, buying a house to live in, right? You're kind of the sucker paying down the mortgage when you own your own house. Or what you want to get is the tenants to do that for you. So essentially it becomes another income stream. But, when I started to realize why, this is when I was still working. I was like, why would I want to put my money into the retail stock market equities when I could just do this rental property thing on my own? Of course, pay a third party property manager, right, to deal with all the headaches. But, if I just did this on my own, I would be able to get a lot better returns and better tax benefits. And that was kind of the path I went down very early on.
Mm-hmm. And as a job creator yourself through your real estate investments, what's a common misconception that you think people have about real estate and its impact on local communities?
I think our strategy that we focus on is workforce housing. So when most people will build new properties or what's called development, they will typically build brand new luxury properties. It makes sense from an economic point of view where, if you're going to build something and mob in all the equipment, do all the design work, you might as well get your highest and best use out of it, which is, on the high end, selling it to rich people. We've kind of tried to align our business strategy to focus more on the blue collar, or what we call workforce housing. Someone also call this the lower middle class. So we'll find properties that will rent for $700 to $1,200 a month. If you're living in high price areas like California or Chicago, you probably think that's absurd. But this is actually how the majority of Americans live, and they need, good solid housing. This is, I'll say it, it is definitely not slumlording, right? That's a class below. That's more of a class C type of asset, built 1960s and earlier. But we feel like, we like this kind of demographic because it is in fact the largest demographic in America, the lower middle class. The people renting or buying properties at 80% of the median house out there. And, it's kind of got a good feeling because when we go in there, whether it's a 100 unit or 200 unit apartment complex, our first goal is to improve the community. Obviously it will increase rents, and that's what we're trying to do at the end of the day to appreciate the value of the asset. But, everybody's lived in apartments, and you've got, the strange people that probably shouldn't be there. Right. That's one of our biggest things. And typically those people aren't able to pay a little bit more in rent for the upgraded amenities. We'll go in and renovate flooring, new appliances, new paint job, new playground equipment for the kids. It usually kind of filters out the seedy people at the end. Of course, we, property managers, are frontline. They obey all, non-discriminatory laws, et cetera. Right. Of course, goes without saying these days. But I think it's a good feeling for us and investors that, it's for the other 99% of the tenants there, they like to see this happen.
Yeah. Well, Lane, I've really enjoyed our conversation. Learned a lot about your backgrounds and as an engineer, and certainly I know that has guided the analytical skills that you've been developing. But you certainly shared some really great insights for our listeners. And I want to make sure our folks can find your podcast, your book. You've got a lot of great advice that's out there. How can we get in touch?
Yeah, they can check out the podcast, which is called The Wealth Elevator. And check out the book, The Wealth Elevator, found on Amazon. And if, people pick it up, screenshot me a receipt. We'll come up with a free digital version, PDF, and then also the MP3 version, because I know I read a lot of books, but I technically don't read them. I just listen to them these days.
Yeah, you certainly are on track with all the trends. Lane, really appreciate your time. We'll link in the show notes as well. Come back on the show real soon. But until then, a quick break here on the show, all about small business, jobs, and entrepreneurship. You're listening to Get Down to Business. We'll be right back.